Hi everyone, Brian from Bear Bull Traders here. It is the weekend again, December 21st, winding up the year 2024. And this, of course, the weekend video. We'll go over what happened in the week in the markets, and it was quite the week. And then we'll take a look ahead and see what we got coming up for this shortened trading week. There are some things that we'll be watching for stocks. And so let's get down to it. So, starting out with a quick review of what happened last week in the markets, it was a pretty volatile week. Fed Powell really rocked the market with some hawkish comments that he made about scaling back rate cuts in 2025, and investors and traders did not like that message very much, even though we did get the quarter point rate cut that everybody was expecting. The markets did try to make some of those losses back on Friday. We got PCE data, the Fed's favored inflation indicator, showed that inflation came in slightly lower than expected, but still above that 2% that they are targeting. As a result, of course, the markets ended the week lower based on that big sell-off that happened on Wednesday. The small caps getting hit the most as interest rates rose again. So all the sectors were down this week. Technology, utilities were down the least. Energy and real estate again took the brunt of the selling there, especially real estate, of course, with those interest rates continuing to rise. And speaking of that, 2-year and 10-year treasuries both up on that, and the treasury, the 10-year up around 4.5, which is sort of an area people kind of targeting as an area where it's more of a concern as rates go above that level. US dollar was up this week, of course, with the interest rates going up. Pretty strong correlation there. And as with most risk assets, Bitcoin ended up down below the $100,000 level. It got hit as well. So that was your week in review. So before we go on here, I always like to do a quick plug for my books that are available on Amazon in all the different media, hard copy, audio, and e-reader. But a couple of swing trade books there. How to Swing Trade, really basic swing trade book. Profiting as an Active Trader, a little bit more deep dive into swing trading. And my latest book, How to Trade Options. If you're interested in trading options, it's certainly a good way to make money, and if you're not careful, you can lose money with trading options. So you got to be knowledgeable about how to trade those, so you minimize any potential loss and maximize gains. So they are available. There you go. And let's move on and look at some indexes. All right, so let's start taking a look at some indexes here. TLT, which is the price of the longer term bonds. You can see here we've really had a strong sell-off over the last week or two. Looked like we were breaking this trend coming up to the upside, and of course this is inversely correlated to the yields. So as the bond prices start to drop, as you see here, yields are going up, which is what we've seen here over the last couple weeks as people are more and more concerned about the fight on inflation and the need for interest rates either to stay high or even go higher, and obviously some concerns about next year and the potential for more inflation if there's a lot of tariffs put on, etc. And there's no guarantee that that will happen, but regardless, that's sort of the concern in the market. You can see here the dollar, of course, is pretty strongly correlated to interest rates. So when interest rates go up, obviously the dollar continues to go up here, continues to strengthen, partly because of those interest rates going back up, but also partly because the U.S. economy seems to be doing the best of all the economies, sort of major economies, Europe, Japan, etc. So strengthening against those currencies. So you can see here the Qs. We did get that big sell-off Wednesday after Fed Powell made those comments. Bit of follow through on Thursday. Then Friday we got this big sort of bounce here, medium-sized bounce. But we are below this 20 EMA, and it's certainly a break in trend. If we drew this trend line up, which I'm not going to bother, but you can see here we've kind of broken this trend line as well. So I don't think that, we did come back up nicely on Friday. So the buyers did step back in after the PCE data came out, and we did manage to sort of retrace back into an area of prior resistance and then prior support. So we may be kind of hanging around in this area, especially as we're going into this shortened trading week, which will be relatively low volume. So here's your level on the SPY as well. I would say that this area right here, this 585 level, pretty important level. If we do end up closing below it, I don't think we will, but we could end up just consolidating sideways. But you can see here we got a cross on the 9 and the 20. Bit of a change in sort of tone in the market. It's all been bullish since the certainly for a good part of the year, and certainly since the election we had that gap up and then continuation move, but topping pattern here, and then excuse to sell off, take profits as we got close to the end of the year there. So again, don't see a big sell-off coming, but there certainly has been a pullback. The Dow, bit of an engulfing candle here on Friday. We may head back up to check, touch these moving averages in this 433 area on the DIA. So we could get a bit of a rally back next week. IWM's really been hit the most. Of course, they are the most interest rate sensitive stocks, and a lot of these companies don't make money, so they depend on loans and to continue to fund their businesses while they try to get profitable. Had a bit of a bounce back on Friday, but again, we're back into an area of pretty significant congestion on the IWM, where we've kind of spent a lot of time before. In the previous part of the year. So again, maybe a little bit more of a bounce back here. And Bitcoin, again, sort of just hanging around this 97,000 level after we got this big sell-off where all the risk gaskets got hit, and we're holding this 20 EMA right now. So we'll see where it goes. Again, we're back into an area where there was a lot of consolidation after this sort of false breakout, and we may just end up chopping around there. But again, watch for a break either side of this sort of channel we're in. And that's it for the indexes. So let's go over some of the trades I did last week and some stocks that I'm in right now. Just a few. This was one that was on my watch list last week. AVGO had this big pop up after earnings, and another continuation move on the following day. And I said I was going to be watching this for some topping after this sort of exuberant move up. And as it started to come back down here on Tuesday, I shorted the 260 calls. That means I will be obligated to buy the 260s if the price goes above it. AVGO at 260, but it didn't. As expected, I kind of felt it got way extended, and it pulled back, and these options expired worthless because nobody's going to buy calls or nobody's going to buy the stock at 260 when they can buy it down at 225 or 220. So that's a strategy that I cover in my options trading book. If you want to read about that. Like to sell calls once a stock has reported earnings and really had an overreaction. BA, I'm still long. I'm looking for this 180 level, and it almost it did get there. Wasn't sharp enough to put an order in to sell it, unfortunately. But this spike up here we did get to 180. I think it could easily get up to 185. There's the next level that might be of interest, but I'm still holding on to that one. I think it's got a longer term potential, and this is my dud right now. TD, still in that. So those were some of the trades that I'm in, and one trade that I did last week, swing trade. So this could be probably the most interesting part of the video. This is stocks that I'm looking at for next week, possible trades. And we'll start out with Adobe. Adobe reported earnings. You can see here they had pretty good numbers. The only thing that the street didn't like was their forward revenue guidance for 2025. That's kind of came in lighter than expected. And you can see the reaction in the market was not favorable. And but what I'm looking at now is we are right down at this prior level of support from back in June. And we had a nice little bounce here on Friday. I think it's really oversold. and I am going to be considering taking a position on this next week, and might be a bit of a longer term hold. And first target could be around, sort of around this 480, which would be a 10% gain. Other thing of note this week, natural gas. Natural gas seems to be breaking out here, kind of a bit of a inverted head and shoulders pattern there. We have broken out from this 1450 level on UNG. We've broken through this prior high here, which we struggled to get through. And this area here, obviously this 1675 could be an issue, but it seems to be breaking out here. And so UNG kind of interesting for a long, and if you're looking for a stock to play rather than the currency or the commodity, because it can be pretty volatile. Here's just looking for some of the stocks that are sort of natural gas based, like KMI is one of them. A fair amount of, I think Cheniere would be another one. But here's Kinder Morgan. Again, nice little pullback here. And maybe we're going to start to move higher through these moving averages. Again, Kinder Morgan, sort of a natural gas play there. Ionic really, on this sell-off on Thursday and Friday, really didn't really held this this level here where we broke out from, and then ripped higher. I'll be looking for this to continue and break out even higher next week. Seems to be something that's in vogue. Same with same sort of comment on Nvidia. You can see here this was this prior high. Where we was resistance, and then we gapped up through and then came back down, tested the breakout level, and then continued to go higher, albeit a little bit choppy. And we did break this this neckline here that I was talking about, 32, but we did snap right back above it, and that's typically what happens when you get a stock that just has an underlying sort of support in the buying. The buyers always looking for pullbacks to take advantage of getting in if they've already missed some of the run. So and here's the last one. Archer kind of looks interesting to me. Looks like it's getting ready to break out as well. So we'll be watching this one for a break again of sort of that 10 level, and see if we can do a continuation move next week. And that is some of the potentials that I'm watching for next week. To see how things pan out as we get into the new year and maybe a Santa Claus rally. Okay, so let's wrap things up here for the week of December 23rd. This, of course, will be a shortened trading week with a holiday right in the middle of the week there, Wednesday. There's your levels on the Dow, Q, SPY, and IWM with support and resistance. A few economic events, but nothing that's going to move the markets around too much. It will be a relatively low volume week as well, with people taking time off. As far as earnings go, there's really nothing of note. So that's it, everybody. If you like this video, please subscribe and give me that thumbs up. And we'll be starting out, of course, doing the pre-market show Monday morning at 8 o'clock. You can join us on YouTube Live, or you can, if you're members, of course, we'll see you in the trading room on Monday morning. Hope you're having a great weekend, and we'll hopefully see you Monday. Bye for now.